Hello, everyone. Again, my name is John Flynn with Flynn Real Estate in the Niagara region, serving Southern Ontario real estate. Today, I have a few things to talk about. I want to talk about the upcoming interest rate announcement by the Bank of Canada and if they're going to go ahead with it or not, and what other people are saying about it. I also just have some brief sales numbers from the Niagara Hamilton area, just to kind of keep you in the loop, and some comparisons between United States and Canada when it comes to prices and rates and all the rest of that stuff. First of all, I would like to thank my clients' daughters for this beautiful picture acknowledging my service to them. It's nice. I get thanks all the time from adults, and I thank them for that. But the kids, they have a little sold sign up here, and it says, "Thank you, John Flynn, #1 real estate. Love, Chloe, Sophie." And they're happy that I sold their house. So yeah, appreciate that, kids. Thank you. I'll put that right up here. All right, so here we can check out the first thing with these. This here is the ratio from the close price or the selling price to the listing price, and I just kind of wanted to, keep you guys up to date on the market around here in Hamilton and Niagara. So this is all sales from 2022, from January 1st, and you can see most of them. It looks like they are February. We got one January here, but you can see the ratio here. I didn't include obviously the addresses or the MLS numbers because this is not information I want to give out. You can look it up. Anyone can find it, but I'm not advertising people's homes and what they got for them, obviously. I'm not allowed to do that. And it's interesting here. You'll see the highest ratio. So we're looking at the highest is 191%, 1.91 the ratio, right? So Hamilton, St. Catharines. So this top page here is 20 of them or however many. And this is out of 2003 sales total this year in these areas. And you can see St. Catharines and Hamilton dominate the top. And again, they're the biggest cities in these areas. So I just thought it was kind of interesting. Now I did get down, out of 2,000 sales from this year, and these are all residential, apartments, detached, semi-detached, townhouses, everything. Out of all of these sales, I had to get down to around 1,500 to 1,600 before we were at 100%. So again, majority of sales are going over list price. Now that's in a combination with a low list price strategy. They list it low to get the showings, obviously. But it was just interesting. And these numbers, they gradually go down. This isn't just, the best numbers here. They gradually reduce as you go down the pages. So, yeah, 191% seems to be the top. And of course, if I do the top, I got to do the bottom to see what's on the other end of the spectrum. So here you can see is the lowest close price or sales price to listing price. And one of them was 0.42 or 42% of list price. So, and again, I don't know the reason for this. And this was in Niagara Falls, and it was listed for 1.6 million, sold for 675,000. It was a rural property. Who knows what the reasoning was behind the scenes, and it was odd. But again, you're looking at on the low end, that was 42%, 77% for the next, and then 82, and it kind of gradually goes up from there. And if you look at the cities here, a lot of these are the smaller rural areas or the smaller cities. So of course they have to usually negotiate a little bit more than the big cities. They're higher demand, right? You can look through the list there. So now I wanted to get into I was talking about something with a client, and it's come up a couple times, and I've seen maybe a month ago the interest rates in the States, the mortgage interest rates I'm talking about. So I said, I want to dig into the difference between Canada and the U.S., kind of average prices and mortgage rates, and then there was a few more. I could have kept going, but I didn't want to get too far into it because you can keep going down the line of statistics. But I just did this general, and I'm hopefully going to have a graph here or a table on this video that I can produce just to compare them. But in the CREA, the Canadian Real Estate Association, which is, again, a pretty good source for statistics and for pricing, and they use a home price index, an HPI. And now if you go to their site, there is averages included, so it's more of an average. Canada, the average price and this is January in 2022, was $748,000. It was just over it, but let's just call it $748,000 for the average house price in Canada. And in the States, the average, now the States is harder to get the information because they have a different system over there and many different systems that they choose. But I went to Zillow, and they have a Zillow House Valuation Index or something, and it was kind of like an HPI because everyone else uses median prices, which is not the same as average prices. So I wanted to compare apples to apples, not apples to oranges. And in Canada, you can't really find a median price nationally. I can get it in my system, but I can't get it nationally that easy. So again, let's look at the US in January, as per Zillow, which is a major player in real estate over there. The average house price was $325,000. Of course, it's increasing just like Canada. Well, maybe at about half the rate of Canada, but it is going up, and they do have a hot market. I just actually posted on my social media this week about one of the agents over there in Raleigh. I forget what state that's in, but she was showing, outside a house, all these agents showing up to show it at the same time. It was like a zoo. They were lined up down the street, and it wasn't an open house. But anyway, that's about 413, 325 US, about 413 Canadian. Other people would say it's 400, but you're getting into median. But even if it's 400, that's 500 Canadian. So 400 to 500 Canadian, but again, the average I got was 413 Canadian. So you can see, like, Canada's average house price is a lot higher in comparison to the States, regardless of how you look at it. And then I started to think, okay, why is this? Why is ours so much higher? So I look at interest rates, and I saw the interest rates. Now, the interest rates in the States, and they work a little differently over there, but they're closer to 4% for their 30-year mortgage. And it's a 30-year fixed rate. Over here, we have like a 25-year mortgage, the amortization, but it's actually a 5-year term. So they work a lot differently, but in the States, it seems like they get a lot better. It seems like it works better, I should say, for them the way they do it, and I'll explain why. In Canada, the average rate, and again, you can get better or worse than this, but the average of like the big banks, and most banks are about 2.89. You could probably say 3%, but I know that you can get 2.89 from most banks. Well, actually, I shouldn't even say from most banks. You'll get 2.89 from the big banks and up. And then other credit unions, you'll get 2.59 and stuff. But not everyone's going to go to a credit union, right? So let's just call it 2.89, and that would be with a 25-year on a 5-year term. So that's only guaranteed for 5 years. A variable rate you'll get at 1.25% on average. You can get as low as 1%, and they can go up to 1.7%. But let's call it 1.25. And of course, in Canada, you can put 5% down with an insured mortgage, and if you don't want insured, it's 20% down. And that was the thing. I was like, okay, do they not have insured mortgages in the States? And they do. With less than 20% down, you have to get an insured mortgage, kind of like Canada. And correct me in the comments if I'm wrong, but just from my brief searches and research, this is what I got. And of course, the Bank of Canada, their interest rate is 0.25%, 0.25, and in the States, again, a 30-year mortgage is 4%. Now, for a 20-year mortgage, it's like 3.6 or 3.7%. So it is pretty much, you can call it at least 1% higher for the average mortgage over there. And then the variable, the way to do variables is kind of, it's different than here. Here you get a variable, your rate varies from day one. In the States, you get a variable, they base it off a 25-year mortgage. The first 5 years is fixed at a lower rate usually. Say 3.1 I have from my research. 3.1. It's usually higher than 3, but let's call it 3.1. And then after the 5 years, it goes variable. So different than here, but it is a little bit lower rate, but it's almost like a combined conventional or regular fixed rate and a variable. And of course, the Fed rate, which is like the Bank of Canada rate over there, is 0.25%. And they have a minimum down payment of 5%, sometimes 3%, but 5%, and you will need a private insurance company to insure that mortgage. So there's not a whole lot of difference in behind the scenes. I thought maybe they weren't insured, so they're paying a higher interest rate, the percent or whatever, but it doesn't work like that. They do require insurance with high ratio 5% to 20% down mortgages. So anyway, there's the table, there's the things. I just wanted to see why. It was a reason. And if anybody knows why our interest rates are a lot lower than the States, let me know in the comments, because I couldn't really find much information on it. So yeah, I want to know, it all comes back to why are our house prices in Canada so much higher than the States? Our average house price in Canada is $750,000. We have low interest rates, which obviously is fueling it, in my opinion, as you know. But in the States, in Canadian dollars, an equivalent of Canadian dollars, it's $500,000, depending on who you ask. Let's call it $450,000. So we're almost double here. Now, the only thing I could see was their interest rates are higher, and it's the banks and the lending institutions, not the federal rate. So does that help keep house prices under check? Maybe. It's the only thing I can see. If anyone can give me a good reason why, they haven't had the extreme increases in price like us, other than interest rates, let me know in the comments. I know that there are differences. Like in Canada, you need a few days to get an approval from a bank or a credit union. In the States, it's like a month to get your mortgage finalized. But regardless, that's, does that affect house prices? I don't know. All right, so now on to the big topic. The big one, March 2nd. Will the Bank of Canada and Tiff Macklem and whoever else influences them have the guts, I call it the guts, it seems like it's a game at this point, to increase interest rates, the overnight lending rate from its low of 0.25%. And I thought the only thing that could have put a damper on it, and I say damper because I believe interest rates should be going up, would be the current global geopolitical war situation, which I'm not going to get into because I have not enough knowledge to get into that. But I do know that it affects markets, and it will affect the Bank of Canada's rate decision because they're worried about financial repercussions from what's going on. So anyway, I did some research, and I have a few articles here from some of the major players, and let's look at the first one. Of course, the first one from the Financial Post, and this was just on February 25th, a couple days ago, says the Ukraine war won't stop Bank of Canada from hiking rates, but a steep path is unlikely. So they're saying, yeah, we're going to go up 0.25%, maybe 0.5%, but they doubt it. Reuters. So here's Reuters' report, and I tried to get different news sources instead of just mainstream media, even though Reuters is, but instead of like CBC and whatever, just mix it up a bit. So the Reuters say, and this again was just in the last few days, they will raise it 0.25%, ahead of the U.S. Federal Reserve. So they're calling for a raise. I didn't see any news reports that said that they're not going to, and these are recent reports, not from 2 weeks ago. This is during what's happening now. Another one, and I think this was from BMO. So this is referencing the Bank of Montreal, and they expect a 25 basis point, 0.25% interest rate hike March 2nd, and say the 50 basis points is unlikely, especially now with what's going on overseas. But they do expect them to hold to the 25 basis points. So I guess my question to you is, before Wednesday, that's Wednesday's the day, do you think the Bank of Canada will stick to its plans of raising rates, or will they chicken out? I know that the last time, like if you look back, and again, I'm not gonna go into research, but I just know from being in the business, 2018 was the last time they've raised the rate above this rock bottom low, and they haven't raised it since. So this is like a necessity at this point. So it's going to be very interesting. Let me know what you think in the comments. I think it's going to happen, but there's a chance that it might not. But of course the news agencies, or the big players, think it's going to happen. And stay tuned, because next week it's going to be a good video with what happened. Of course, we're going to touch on what actually happened with the rates, and I'm going to have February stats in for the local market here for Hamilton and Niagara. And I got some interesting stats. I already took a preview at them. They're not complete yet, so I didn't want to touch on them this week. But it's interesting to see what's happening now from January to February. So yeah, appreciate you watching again, and stay tuned for more information. And as always, like, share, subscribe. It helps me get this information out to more people. Have a good day.